how much financial means do you have in order to invest in real estate without it hurting your daily and monthly, yearly expenses on your personal side?
All right. Well, I guess we get started. I'm super excited. Thank you so much for taking the time to come on here. For people that don't know, who are you and what do you do?
Okay, cool. Well, my name is Sofia Castro. I have been in the finance and real estate investment uh, arena for many, many years. Myself and my husband have been in partnership for been together for 34 years, but we started this journey probably about 30 years ago. And we started off with none of us being graduated from high school. And we decided that we were going to jump into the journey of being entrepreneurs since the day we met. And it went, we went through ups and downs like everybody else. But my husband had this saying that since the day I met him, that it was like PMA all day, every day, and it's positive mental attitude. And we weren't going to let anything stop us. And even though that we didn't have any financial means nor education per se, we had street smart and knew that what we wanted. So that was the most important. The perseverance and the tenacity was, way bigger than just having that degree in our hands. So we started ventures and they failed, and came across a company that was about financing equipment leasing business that we had no clue whatsoever what it's all about. But we decided that we were just going to go into it because it was such a unique business and not really a lot of competition, nor it was really something that people knew about, but it was something that was very needed in the commercial space for small to medium-sized business. Um, we had a passion about real estate, but in real estate, if you don't have the financial backing to support your day to day or your monthly expenses, you really can't succeed. So we wanted to find something that was able to subside that money that we could then go into real estate. But the business took us on a long journey, and eventually we were able to stack and rack, and that's stacking up your savings and rack it into investments. In After like a few years, we started our financial journey in 95, and in 2003 we were able to start investing in real estate knowing zero about it. And in 2008 we almost lost it all, because we jumped into a journey that we had no clue, and we thought it was super simple because everybody got into real estate, and they decided that, hey, everybody could buy a piece of land and be able to be a landlord or just own property. And that wasn't the case, because we jumped in all in, like we do all the stuff that we do. We jumped all in, and we almost failed. But again, with the PMA and the persistence and tenacity of our personalities, we were very blessed to be able to get out of that journey and be able to. Two things happened to us in that journey was that we learned for us, all failures, we like to take them as university degrees, because a lot of people take failures and they just drown and they just say, oh my God, that's it, I'm giving up. But for us, it's like, okay, what did we do wrong in this journey for us to be able to take that and correct it and do something even bigger or better? And what we learned in those two, in the journey with both businesses, was that you need to have some sort of knowledge when you do jump into a business, and be sure that you study all of it, and making sure when bad times come, what is it that you need to do when good times are there? Everything rolls really smooth, right? So And in the business, in the real estate investment firm, what we learned was that rental properties was the place to be. Having that steady monthly income and being able to have properties that are not only giving you, residual on a monthly basis, but yearly, they're increasing in value if you buy the right type of property. So in this failure that we happened to go through in 2008 and 9, we were able to grow both of our businesses by a very large amount. And in 2019, we decided that we really, really loved the real estate investment company more than we did the finance at that time, because we had more freedom in the real estate. And we were able to get bought out from our finance company at a $1 billion evaluation. And at that point, when we did that, that was a huge victory, obviously coming from absolutely $0 to being able to have a company that we were able to sell for that amount of evaluation. And at that point, we jumped into the real estate investment, into multifamily, and really went big. And but we had already gone through all of our downfalls in multifamily, and we learned so much that we were so confident in being able to invest all of our monies into that sector. And today, we are very blessed to have a $750 million portfolio with about 2,500 doors with 0 investors, and it's all of our money. So very proud to be able to say that myself and my husband were able to accomplish all of that with no high school diploma or university degree.
Hey, y'all are such inspiration. Like I said, I'm so grateful you came on to share this and your journey and y'all's journey. That's incredible. What, you said y'all had some downfalls when you got into real estate at first. What were the biggest downfalls that people should avoid, that maybe that y'all didn't know at the time, that you had to figure out the hard way?
So I would say there's probably about, it's not only one, I think it's a few of them. I would say number one is how much financial means do you have in order to invest in real estate without it hurting your daily and monthly, yearly expenses on your personal side? Because I think that's one that a lot of people miss. Really, they don't pay attention to it, or they think it doesn't matter. And they think that I could get into real estate with having, a little bit of money or using somebody else's money. And they don't understand that having a real estate property does take money to maintain it, right? And so I think number one is knowing your financial means. Number two is knowing what kind of asset type are you going to invest in. There's so many different asset types in real estate. And again, everybody thinks real estate is all one general bucket, and it's not. Even in alone in multifamily, having an A asset to a D asset, all of them are run so differently, and they take different management theses as well. You can't just say, I'm going to buy any multifamily, I'm going to go buy an A asset. Well, guess what? An A asset is run. You need a very professional management company to run an asset of that caliber, because your tenants are going to expect nothing but A plus. And as a new investor, you're not going to know how to run that, right? So then if you buy a B or C asset, you also need a lot of money because the buildings are older. So you need a lot of carrying money. They don't know how to manage that as well. So there's just so many things. Then other ones, oh, I'm going to buy a shopping center. Well, do you know how to manage a shopping center? So it's knowing what type of assets are you going to invest in real estate so that you could be extremely knowledgeable once you jump in. And you'll know what you need in order to manage that. You're right. So, and then the other one is also, are you going to hold for a short term, or are you holding for long term? What are you doing? What is the goals for you on this investment? That's another one that a lot of people don't even think about when they're buying it. And it makes a huge difference because you need to know if you're going to hold it for short term, don't invest a lot of money in a property that you're going to try to flip for somewhat of a profit. It doesn't make any sense. If you're going to hold for long term, then you need to understand that you need to make sure that you have carrying costs, reserves, and the whole nine yards to be able to maintain that property for 10 years. And what are the goals for you to be able to increase the valuation on that property for the next 7, 10 years? So there's so many different aspects of knowing before you jump into investing into a property.
That's so powerful, and you probably going to save a lot of people a lot of headaches. Um, Whenever y'all did jump in, I guess you're just such go-getters that you probably just started buying and then you figured that out along the way and maybe sold a lot of stuff off cheaper than you wanted it. How'd that look?
Yes, that happened. And we also invested too much money on some of the properties, because when we first got into, buying these properties, we fell in love with the properties, right? So we wanted it to look perfect in the way that we, invested like if it was a home. So we wanted to put the best tile, the best granite, the best everything, and we put in so much money at the beginning into these small little units that at the end of the day, the tenant that was going to live in there can't even afford the upgrades that you did. So we did that mistake at the beginning and realized it very quickly, and then had to sell some properties for, less than we wanted to. And others we, got away with selling it for what we put into it, and others we did really well, but that we learned that very quickly, being that we had already a business mindset and we understood, the ROIs that we were expecting and so forth, right? But a lot of people that don't or haven't had prior businesses, don't understand that. So luckily we were very blessed to know that we did, oops, hold on a minute, this is not the way this runs. So we stopped that very fast and only did it probably on one or two properties, and then we understood the whole game.
It's awesome. You said something that really stuck in my mind when we were talking, I think it was at MDM, and you were talking about how much leverage y'all use as opposed to cash, and what percentage leverage. I'm sure this depends on the level and the asset class and all this, but what percentage leverage do you recommend for people to use when they're looking at buying an asset, real estate asset?
So this is a tricky one. So, at the beginning, you want to go with an 80% leverage, you want to put that 80/20. But then when you have the black swans that we had with COVID, or you have a market shift like we have right now, and the rates go up, and you now are so highly leveraged that you cannot cover the expenses or the debt with the income that you're receiving from the property. So this, I would really tell you, the underwriting on when you're looking to buy a property really, really makes a big difference. Bobby and I, we only leverage ourselves, 60%. That's all we leverage. If we can't buy a property, between 40 to 50%, and in today's market, you're not even buying, you're not getting leverage at 60%. It's just impossible. It doesn't cash flow. So you're really going at a 50 to 60%. You're getting 40% leverage, really, not, so it all depends on deal per deal, because if you are able to steal a property, Travis, and you're getting that deal, you're stealing it, it's okay to go high leverage because you understand that now your rents are going to really be significant because you purchased this property at, at pennies. It's okay to go high leverage. But if you bought a property and you're at market or above market, how are you going to leverage yourself so highly that you know that your rents are not going to be able to cover your expenses plus your debt? So you really have to underwrite a deal. And underwriting a deal, I'm not just saying going and, just a normal underwrite. When we underwrite a deal, our acquisition manager, and Bobby, because he's very involved with that part, we cut the deal at 50 and sometimes even 60%. And we look at it like, if the world's going to fall apart, and if the world fall apart, who's going to be paying that rent? So we kill the deals because we want to make sure, like when COVID came around, this time around, we were so prepared that we are very extremely blessed because of what happened in 2008 and 9 to us, that this time around we were extremely safe. We had zero issues. We never had to go into our pockets to cover any of our expenses or any of the debt on any of the properties, because we had run them at, if the world falls apart, we're okay to cover everything. So we play it extremely safe. And, also we've been in the game for a long time, and we have been able to be very blessed to go low leverage on all of our properties. But you get a lot of these newcomers that want to get into real estate, and then they get all of these social media people just telling them to go in with $0, use somebody else's money, go buy a property with zero down, go high leverage, you're going to be fine because you get rental income. And unfortunately, this is where you get that, everybody tells you, oh my God, I hate to be a landlord. Oh my God, I don't want to be in real estate. Or, no, it's not that. It's just that you didn't know how to do it, and you wanted to do it the fast way, the easy way, and that's the results you get. But if you come into real estate and you're extremely knowledgeable, you know how to buy and sell well. So, but you cannot say, I'm going to come into real estate because I'm going to become a millionaire or a billionaire. It just does not happen. It's a very slow growth, and you need to have financial backing of your own money in order to be able to be a successful investor in real estate.
And all that is so much gold. And I remember you saying, slash the deal in half, and that really stuck in my mind. And then I heard Bobby say it after that. You hear something, it resonates, and then I just think that's such a good point. Is slash it in half. Just slash it till it's.
Yep.
But yeah, that's awesome. So what about relationships with brokers? I know that's a big thing too, getting in the multifamily space, getting in the bigger and better deals. How important is that? And how do y'all do that?
That's an extremely important part, believe it or not. I know that it's not necessary, but when you become a real estate investor as a profession or as your career, that you're looking for this to be your bread and butter, you better make sure that you get together with these realtors, because you don't want these deals that have been out there in the MLS or on LoopNet, and that everybody has seen these deals, and that you're not getting that cream of the crop. And commercial real estate brokers that are in the multifamily, or even in storage, or in fix and flips, or whatever it is, you want to make sure that you're in with that realtor that's giving you the deals that are off market, or they're just getting them into their hands, so that you're able to get these really good deals, right? And sometimes these realtors get this distressed deals, and they're only calling their book of business that they know on people that when they call them, they have the financial backing. They know they could trust that they could close on the property, and that they are reliable people. So getting on with realtors that know you, that understand what you're looking for, because that's another thing, is that you want to make relationship with realtors that understand your investment theses, right? Because you're not going to be wasting a realtor that does shopping centers time when you're looking for a multifamily, or you're talking to a multifamily guy and you really want storage spaces, So knowing the realtor that is in the market that you want, knows the type of assets that you're investing in, is huge. And becoming not only friends as a fake friend, right? You don't want a realtor to say, oh, this person only calls me because they're not really a true person that, that has a true relationship. And I'm not saying you have to become best friends with them or nothing, but you want to make sure that they understand that you really value the relationship that you have with them, and that you're bringing them value and they're bringing you value, right? So when they call you with a deal, that you're able to execute if that's what you've been asking for. Because if a realtor calls you and they bring you a deal and then you're like, oh yeah, let me look at it, okay, yes, they're never going to call you again, and they're going to say, okay, off my list, right? Or if you don't follow up and create that relationship of like, hey, just checking up on you, wanting to see what you're up to, what is the market like, this and that. Me and Bobby could call any of the realtors that we deal with, and we literally have created a relationship with all of them because they've happened to be very cool people. And we ask them, hey, what is the market like, what are the rents like, what is this, what's that, and they call us back. They answer our questions, even though that we're not buying a deal from them. But the relationship that we've created in this market, that they know that we are true people and that we value their profession, and that we value what they do for us, and we give them value as well. It's something that's very important in this industry, even not only on the realtor side, but also on the debt side, right? You want to create relationship with debt, because even right now, debt is extremely difficult. And if the debt company doesn't believe in you, how can they sell your deal to that lender or to whoever? So really having those true relationship is a very, very important part in being a real true real estate investor.
Man, I'm so fortunate to have you on this evening. I'm so appreciative. Thank you so
Oh,
much.
thank you, Travis.
I'm going to
Thank
open
you.
up the Q&A if that's okay.
Yes, please. Love
Uh,
to.
Why'd you have to pick me first?
Hot seat.
Yeah, I know. So I guess right now where we're at is building the relationships with the brokers. So is there like anything you say in that initial conversation that really helps you kind of feel out for who you want to pick as the person you're using as well? Because I mean, some agents aren't very active. So
Yes. And yeah, the way that we've done it is that we studied the market. Again, this is knowledge, right? So we studied the market. We really looked at who is in our space. We really targeted, okay, multifamily, what is it, the A, B, C space. I'm not sure what market you're in, but if you're buying and flipping houses or wholesaling or whatever it is, knowing what realtor really understands the market that you are looking to invest in, picking those top 5, and having getting on a call with them, taking them out to coffee. I know a lot of these realtors sometimes are like, oh, I'm too busy, or so you need to get that relationship going via email, text message, setting up a time where you send them the resume of what you've done and say, hey, listen, I'm really a serious investor. I'm looking to make a relationship with realtors because I am active. I want to create a portfolio, whatever it is that you're looking to do in real estate. Give them a little bit of a resume of what you're doing, what you're looking for. And that way it creates a relationship based first on, email or a phone call. After that, they'll start calling you. They'll show you a property. They'll sell a property for you. Then after that, they'll, hey, can we do lunch? Can we do a dinner? Can we do a coffee? And then create that relationship. But at the beginning, it is hard. Realtors do have, quite the different personalities sometimes, and it's difficult to be able to communicate with some of them. But you'll find out who is the ones that your personality matches best with, and there's realtors that Bobby is able to have more of a conversation than I am, and opposite. There's some realtors that I'm the one that has the relationship with, and there's some that we both have. It just that, personalities, it's like anything, just like a boyfriend and girlfriend or even a friend, it's finding that connection with the realtors that that you're able to create that business working value to value that works. But you know, just explaining what you're looking for, being very specific on what your target niche is and what you're looking, and they're going to appreciate that, because at that point, that's when they're going to reach back out to you, because they're going to say, okay, this is a serious investor. I want to do business with this person because I know that they're going to give me value as much as I'm going to give them.
This is awesome. Thank you, Sophia.
You're welcome.
I'm big on the phrases that you and Bobby say. I think I have one written on my board actually back here, staffing rack. But adding to that, all failures are degrees. That's a good one.
Yes.
I heard it.
If you take them in the right stride, if you don't do them again, if you don't do that same mistake again, is you know. But if you do take it and flip it over, it is definitely a degree.
Absolutely. I guess I just wanted to ask regarding how do you, in recommending folks get started, I guess, how do you balance, or maybe looking back at where you started, how do you balance preparation with like jumping in and learning from the mistakes? Like,
So,
what does it mean preparation, I guess, even?
yeah, so what I like to tell new starters in real estate investment is make sure you understand what market you want to invest in, right? At the very beginning, I always advise everybody, do it in your backyard, regardless of what you want to invest in, whether it's single family, multifamily, shopping centers, storage, anything. Do it in your backyard so that you can see it, you can feel it, you could really get into the space. Number two is, once you know that, you already studied it and you have your mindset, know how much financial means you have to invest. Meaning, if you have only, you know, I don't know, $100,000. Well, you need to understand that that is all you have. $100,000. What is that gonna get me? Because that's your down payment, that's your reserve, that's your CapEx money. So knowing that I only have $100,000, and I'm just saying numbers, what is the amount of property I could purchase to have the down payment, the reserve, the CapEx, everything? Because that's all I have. So I could wish for 100 doors, but I could only afford one door, right? So just because you wish it doesn't mean that you could do it. So understanding what you could purchase at your first investment property so that you don't fail.
Yeah, that's helpful.
So then from there, you're able to then understand, you know, hold on to it. I always like to tell everybody, your first investment, don't hold on to it more than 18 months to 2 years max, so that you could sell that, reap the rewards of the, you know, of the valuation of the property, and then go and buy 2, 3, whatever it is that you could buy, or even refi, cash out if the property accepts that refi and it still can sustain itself, and then go buy your next one and your next one, and then you take that stepping stone. But those, I would say that first two is knowing the asset type and knowing your financial means.
Chris, what you got?
Okay, so whenever you're getting into something and you're trying to figure out, hey, is this what I want to do, when you're doing your studying on it and you start digging in, do you ever find out as you're into it, hey, this isn't really where I want to be at? Do you adjust things and make it work, or do you realize, hey, this isn't what I want to do, and shift gears and do something else? How do you approach that?
So Chris, this is where I say, before you jump into an investment, make sure that you understand the asset class completely. The goods, the bads, the, you know, the ups, the downs of the market. Understanding everything through A through Z before you make that jump, because we did do that jump. And I'm going to give you the example. When we first jumped into real estate in 2003, we went into condo conversion. Had no clue. All I thought was, of course I could buy and sell. I could buy a building and sell each individual units. I was a realtor. I was like, this is so easy. Well, when I got into it, I didn't understand, or we didn't understand, that we now had to hire attorneys of all different arenas of the real estate industry to um, deed each individual door one by one. You know how long that takes? A year it took us for each building. And then to hold on to these properties without making $0 on them for a whole year and spending money. We're like, oh my God, this was not what we expected. We expected to buy and sell, a fix and flip type of deal. Well, we found out quickly that that's not what we wanted, but we lost millions of dollars, right? So I would never do that mistake ever again. Like I said now, if you have done that mistake and you're in it at the moment, right? Understanding the shift is also important. What am I going to do right now if I shift? Am I going to lose my money and just come out of it and let go of the property because I'm into this deal and I'm over my head and I can't afford it? And let me just get rid of it even if I have to come to the closing table with money? Or am I going to see how I could get this asset to be profitable and hold on to it? I don't know the situation. Every situation's different, so that I don't come out losing and I'm able to at least win or at least come out even. But I wouldn't jump into an investment without really knowing the A through Z's on this asset type. So I don't know, are you in that right now? Is that happening to you?
No. I hadn't made any bad investments. I'm just getting into it. I'm a contractor, and I bought my first flip house, and I bought a commercial property. And I think I've done really good on both of them, but I'm just trying to figure out where I fit in the real estate, which avenue I want to go in. So I haven't made any bad decisions at this point, and I don't want to. I'd rather not. That's why I'm on this. That's why I'm on the Zoom meeting, to not make any bad decisions.
Yes. So I would tell you that I would definitely do deep dives. Commercial and flipping a house, two different animals, completely different. You're dealing with two different types of tenants. I don't know if you buying the commercial sites to also do like a fix and flip?
No, well, I just bought it because it's at my back door, and I got a phenomenal deal on it, and the area's building up, and I can probably double or triple my money in a year or two.
Okay, so commercial sites, you're dealing with a business owner, right? That's leasing out space for their business.
Well, this one's not. It's a vacant building sitting on land. 6,000 square foot building sitting on 8 acres of land I got for $200,000.
And you just have it vacant right now?
It's vacant. I just acquired the building like a month ago, so
okay.
I'm trying to figure out. I'm functioning. My construction company's functioning out of it now, and I would like to move a tenant in. So I'm kind of wanting to do that and let a tenant pay my mortgage on it.
Yeah, perfect. And I mean, if it's 6,000 square feet, you could also split it in half and have them pay half of it and you stay in the other half and pay $0 for your business, right? So again, such a different type of real estate than buying a home, fixing it and selling it to a residential living, right? So again, which one do you like more? Which one do you feel that you're able to, that you can feel more as an investment that you like more, right? I know people that run shopping centers. That's not my cup of tea. For me, it's too much of a market reliable source, right? Like, so if a mom and pop is into it's your tenant, and right now going through the whole thing that we're going through, the economy shift, the online shopping, and they can't afford your rent, they're going to take off without telling you they're taking off. Now you have a vacant location and you have to wait to see when is the next tenant that's going to come into it, right? And I'm not saying that's the case in your property. I'm just saying this is my knowledge on when I looked into shopping centers. So I don't personally care for them. I like to have multifamily rentals because no matter what the market is, yeah, your rents could slightly go down a little bit, but everybody is always going to need a roof over their head, no matter if they have a job, if they do have a job, if the economy is up, if the economy is down. No robot, no online programs, nobody could ever replace a roof over your head. So that's just the choice we picked and the one that we like to invest in, and that's the one that we feel that we know how to run extremely well. We know how to manage it. We know the market on it and so forth. So I would really look and see, how do you feel comfortable dealing with tenants that are commercial based or businesses, not residential? Selling a home, you're putting in, whatever it is that you have to put in. You're a contractor, so for you it's a very low cost to be able to fix these homes and flip them, and then you're putting them on the market and selling them. Again, we personally don't want to be in the market of being a realtor or buying a home and flipping them constantly. We like long-term holds. And there's none that are right or wrong, Chris. They're just a matter of your thesis of how you want to invest your money and what your goals are for your ROI. There's just no wrong or right. Make sure that you just understand your investments so that you don't fail or that you don't get turned off being a real estate investor.
JP, last but not least.
I appreciate it. Sophia, appreciate you coming on.
Oh, thank you.
I think I'm going to go back to relationships, but I think I'm going to take it in a different route. I'm pretty sure I asked Bobby the same question, so no pressure.
Let's see if we answered it. We answer it the same way.
We'll find out. It has to do with you two working together. I'm working basically 2 jobs right now. Time with my wife is somewhat diminishing a little bit, but I'd love to include her in the business. Some of the answers I've gotten in the past is like, hey, figure out where your strengths are, weaknesses are. How do you guys manage it, operate, on your day-to-day within the business, outside of that successfully?
Yes, so that's a loaded one. So when we first, Bobby and I were a little bit of a different, unique thing here because we met at 18 and 22. And we just decided that we were going to jump into working together since day one. So, we've gone through some ups and downs and it's not been easy. We finally figured it out after many, many years. But what I like to tell couples is I draw a highway and I love for everybody to take a lane on that highway. But going on the highway on the same direction, not opposite directions. We're going on this highway. If you're heading north, we're all heading north. But pick your lane. Understand what you're going to take responsibility for. Understand what she's going to take responsibility for. And stay in your lane. If one of you fall, you're on the same highway. All you need to do is put your hand back, grab, hey, get up because we're going. Let's go. I'll tag you, I'll drag you for a little while, and I'll help you through it. I won't let you fall. But understanding that if you take responsibility for this, you're taking responsibility for this. And I always like to tell Bobby, don't jump into my lane, because if you jump in my lane, imagine you in a car and you bump into that car and you either pop the tire or you crash the car, and now that car can't move anymore. That car is stuck there because now you have to wait for the tow truck. You have to wait for a new tire. You have to wait for, right? So don't jump in my lane and crash into me, because all you're doing is delaying all of us, because we're in that same team. And if we have that same goal, just get together and, and let's go shoulder to shoulder, hold hands, do whatever, but head north if that's where you're heading. And if you understand that, both of you, it's so much easier. I wish I knew this from the get-go. But Bobby and I, at the very beginning, we wanted to do everything. I do everything, you do everything. So we used to put double effort into something, and then something would get done, and the other one would come along and redo it and just break everything that was already done. And we're like, oh my God, wait, and now we're going backwards, because now we have to redo this because you did it, I did it, and now both of them were done differently, right? So we have different ways of working, Bobby and I. We have a completely different style of working, but we could work together when we understand who's picking what lane, and this is yours, this is mine, and we're going that way, right? And even as a housewife, I tell a lot of housewives that have the husbands that are working and they want to be moms, right? And they want to stay home with their children. That's beautiful. That's a job. You have the kids. You got to take care of your children. You got to feed them. You got to bathe them. You got to do homework with them when your husband gets home. Don't expect your husband to come and take care of the kids. You picked that job. You picked to be a stay-at-home mom. I understand that it's a frustrating job, but that's your lane. You picked it. Don't bitch about it. Take ownership. That's a huge job. I don't want that job. I didn't want to take that lane, but the women that do, I give them mad respect, because that's a huge business. That's a business that brings no manual, no business plans, no nothing. You got to figure it out day by day. But if your wife wants to come into the business with you, just outline what you want to take responsibility for and outline what she's going to take responsibility for. And it doesn't mean that it has to be 50-50. She could take responsibility for 10% and you're going to take responsibility for 90%. And you got to be okay with that if that's what you chose. Just understanding that part, you will be 100% perfectly fine being able to get through everything and really end up at your goal line, which is at the end of the day, you're in the same team and all you want to do is get to that goal. How are you going to get there best? You figure it out. Everybody's plan is completely different. Everyone. Even mine and Bobby's right now, it's shifted. You know, we shift on a yearly, monthly, sometimes quarterly basis. We'll shift what we're responsible for, but we sit down and we talk about it. Hey, you're going to take this. Hey, let's switch this. I need help on this. I need, so it's okay. It doesn't mean that you have to permanently stay on that lane, but when you're going to shift lanes, make sure that you're communicating about it so that you don't crash into each other.
I need so much value. Could have wrote a book on all of this. Thank you so much, Ms. Sophia. I appreciate
You're very welcome.
And, where can people that listen to this find you at?
Well, on my social medias, we have Instagram. It's official Sofia Castro, and that's Sofia is spelled with the Sofia. My LinkedIn, it's Sofia Castro, and I believe my Facebook is also Sofia Castro. I don't remember that, but I also have my webpage that you can find us on upsiders.com, where you can find all of our information, social medias, and so forth.
Awesome. Well, you have a good evening, and thank you so much again.
Thank you so much for inviting me, and I hope that I was able to answer all of your questions and that you're able to get value from it and be able to be successful at whatever that you choose to invest in.